So there's a lot of talk about the market being in a bubble, the market about to crash, a lot of different things. So I've looked and I said, I got to let some people know about what's going on. So if you're interested to know if we're in a stock market bubble or if the market's about to crash, you sit right there. Folks, we're going to talk about market timing today. And before any of you turn it off, when we talk about market timing, we don't predict which way the market is going to go. And a lot of people feel that you can't predict the market or you can't time the market. I'm not going to say that we're going to predict it, but we can time the market because we watch the trend of the market and we keep our subscribers on the right side of the trend. So whether you believe it or not, let me show you some evidence of watching the trend of the market, tracking the trend of the market, and how a market timing call can save your bacon time and time again. If you like the content, don't forget to subscribe to the channel. Also hit the bell icon so you'll be alerted to when new videos like this come out. And most of all, hit the like button. If you like what you see here, hit the like button. And then afterwards, I want you to comment in this video about what you think about market timing. Whether you like it, whether you agree with it, whether you disagree with it, let me know in the chat and I'll answer you if you have something to say. All right, so let's get into what we need to cover. Now, as I've been looking at what's going on YouTube, a lot of interesting things about people searching for stock market bubbles. Searches show increased interest in market bubbles. Look at this, 2020 going into 2021. Holy smokes, Google Trends search for stock market bubble over time. There's a lot of searching. That means that a lot of you out there are interested if the market is in a bubble. You hear people drop those words out there in YouTube land and you want to know what's really going on. So as I looked, I said to myself, I want to talk about more what a bubble is. A bubble is an economic cycle that is characterized by rapid escalation of market value, particularly in prices of assets like stocks. During a bubble, assets typically trade at a price or within a price range that greatly exceeds the asset's intrinsic value. If you look, there's a lot of stocks out there that are trading above their value. We give an intrinsic value on every stock, but many of you use PE ratios, and you'll see that those PE ratios are rising. There's a lot of stocks out there that are overvalued, and the price does not align with the fundamentals of an asset. Interesting. So when a bubble happens, what can happen? Let me take me off this screen for a second. What can happen? A range of things can happen when an asset bubble finally bursts, as it always does, eventually. Sometimes the effect can be small, causing losses to only a few, and are short-lived. At other times, though, it can trigger a stock market crash and a general economic recession or even depression. So when did that last happen? That last happened in 2007, 2008, when we had the housing bubble. And when it burst, we went into recession on the precipice of a depression. So maybe people are thinking that with what's going on with COVID and the recovery and the stocks and the interest rates and inflation, are we back at a level where the market is in a bubble? Well, if that's the search that everybody is looking for, let's get into what the VectorVest software has to say. So I'm always going to start off in this case looking at our market timing graph. Now, what is a market timing graph in VectorVest? Well, it's an indicator, the VVC or VectorVest composite, that tracks the movement of over 8,700 stocks. Folks, you're looking at the move of 8,700 stocks. Why do we like it? Because it gives a better example of the broad market move. The S&P 500 tracks 500 stocks. The Dow tracks 30 stocks. The NASDAQ tracks about 4,300 stocks, but it's very tech heavy. This is a wide-ranging view of a lot of stocks stored in one place in one ticker symbol known as the VVC. We track the trend of the VVC. So let's look at what's going on right now over the last 6 months. Here's the price movement of the VectorVest composite. hitting higher lows, and right now sitting at a level of an all-time high. But notice, we've never broken through this uptrend of the higher lows. So that's one thing that says we're not in a bubble yet. Are we looking to be in a bubble? Well, you know something, the VectorVest software is designed to tell you when it's okay to buy stocks and when it's not okay to buy stocks. We have an indicator called the MTI, or Market Timing Indicator. This is cast on a scale between 0 and 2, but it gives us an exciting level of knowing when the market is supposedly at a point of being overbought. And notice that every time it gets to that level, at some point in time, it does pull back, hit that level of support, boom, hit that level again, hit that higher level of support, higher lows. Notice that in the most recent activity, that MTI is not telling me that the market is overbought. So now, how do you learn more about what's going on in the market? I'm glad you asked that. Every Thursday right here on YouTube, I've got a session, a live stream called Trending Thursday. I talk a lot about behind what's going on in the market by way of the Fed, with jobs, with interest, with inflation, all of those things. But given all of that information, if you want more, make sure you tune in on Trending Thursday. That's why you've got to hit the bell icon so you'll know when that stuff happens. Given all of that, we're not in a market bubble. The market is at a level of highs, but not telling me that it's at a level of being overbought. Now, I'm going to take this to another whole level. You want to see if this really works? I'm going to go to a different market timing graph. Same indicator, looking at that VVC, but we're looking at 21 years of information. When was the first bubble that many of you probably know about? Well, 2000. We had the dot-com bubble. And the dot-com bubble happened back in we had a market top in the market at March 10th of 2000. In our system, we have a slow timing call called the confirm calls. We got a confirmed down call on March 10th of 2000. And look at that downtrending market. Boom, all the way down, all the way down, all the way down. And then we got a beautiful upturn in the market on March 21st of 2003. Look at that movement up. When I say we track the trends of the market, I'm not just whistling Dixie. Look at that rebound and look at that move. Look at that early call on March 21st of 2003 coming off of that bottom. Was that a great opportunity to buy stocks? Absolutely. Now, when I look at this call, our confirmed call, it's designed to never miss a major turn in the market. When else did we have another major turn? The housing bubble. October 11th of 2007 was a market top back here. And then coming into off of that level, we had an up call on March 26th of 2009. That was 2 years after 2007, 2008. Look at that crash in the market. That's the housing bubble. We don't predict that, but guess what? We gave a good early call out of the market on 11/1 of 2007, and look at that fall. Would that have been a good opportunity? It's the trend of the market. We didn't predict it, but every major call that happens, we have a market timing call that will never miss that call. Coming off of that bottom again back in March 26th of 2009, coming off that bottom, look at that. That's a major move in the market. Yes, we're going to have up and down calls, but the major moves, we have a call for it. It is the slowest, most conservative timing signal we have. Then we get to 2016. We call it the Trump rally. Look at that rally. Boom. Look at that call coming off the bottom of 3/1 of 2016. Whoo! Look at that move. Did we have a pullback? We sure did. Was that a big pullback? We got a down call on 10/4 of 2018 going into 2019. Big move to the downside. Nice up call again on 1/18 of 2019. And then what happened? COVID. When did we give a down call there? 2/28 of 2020. That's COVID. And look at that move compared to all of the other down moves that we've had in the market. Look how far down we fell. Good gravy. And then recovery. 5/18 of 2020, nice up call coming into where we are right now. So when I say that we track the trend of the market, again, it is not just willy-nilly. Every major move up or down in the market, our confirmed call has done a good job keeping our subscribers on the right side of the market. Let's go back to where we are right now. Again, the MTI not at a level of where the market is looking for a top. The market is not in a bubble. Now, is the market overbought? Absolutely. Why? Because there's a lot of stimulus still out there. People are still making money on unemployment. Interest rates are still low. What do you need to look at, though? The Fed is looking at looking at inflation. So keeping that on the mind, keeping that on your mind, the market is poised for a pullback. And when that happens, we need a catalyst to make that happen. And the biggest catalyst that I see happening is when we start raising interest rates. When that happens, the market will pull down precipitously. We're not at that point yet. The market is not at a level where it's going to crash just quite yet. Will we have times when the market is moving down? Yes. Now, if you're a VectorVest subscriber, we will give you guidance as to what's going on in the market every single day to help you make the right decisions at the right time. So everybody out there can search for market bubbles and search on what videos are out there on market bubbles. I'm here to tell you that VectorVest has a system designed to help you make the right decisions at the right time to protect your assets so that you don't give it all back when the market does decide to go down. So with that, folks, thank you for joining me here for this video. If you enjoyed this, share this with other people. Show them what we're doing over here at VectorVest and that you can time the market and that we have a market signal that has never missed a major turn in the market. Once again, look down in the description if you're willing to take a 99-cent trial for 30 days to get this kind of information. We'll let you know. So until the next time, folks, see ya.